Hello and welcome to CCTV's new program, Global Business, where we bring you insights into Africa's ever-changing business landscape. From Nairobi to Johannesburg, from Lagos to Cairo, from small businesses to large-scale corporates, we take you directly to entrepreneurs behind the headlines. I'm Jitu Abraham here in the Kenyan capital of Nairobi, where it's 9 p.m. It's 2 p.m. in Washington, D.C. and 2 a.m. in Beijing. Wherever you're joining us from, welcome. A big bailout for African bank investments. We look into the details of the rescue plan. And the world's biggest chocolate maker cancels its Monday meeting over the pending Ebola threat. And the money tree that farmers want nothing to do with. African Bank Investments, more commonly referred to as ABLE, has suspended trading of its shares and bonds at the Johannesburg Stock Exchange. This comes just a day after the South African Reserve Bank announced a $1.6 billion rescue plan for the unsecured lender. Now, the central bank will pay off some of ABLE's bad loan book, while a consortium of commercial banks have agreed to underwrite part of its capital raising. ABLE says the suspension is in the interest of the public, and it would also apply to have trade of its securities suspended on exchanges outside of South Africa. ABLE shares are also trading in the United States and Germany. ABLE shares last traded at 31 South African cents on Friday, valuing the company at just $53 million and representing a 97% plunge just this year alone. CCTV's Angela Coppola tells us what's hurting the bank after conversations with sources familiar with the story.
ABLE was once the darling of the JSE, having traded in the Aussie Top 40. And its demise has been coming for some time, though, after its last rights issue. And the Registrar of Banks has been in discussions with the management of the company to try and find some solutions. At the same time, recently some concerns have been raised about the veracity of the country's banking system.
Well, the Reserve Bank's role, one of its primary roles, is to maintain financial sector stability. If they had allowed ABLE to go bankrupt and default on its debts and all of its deposit and bond liabilities, it could have triggered a domino systemic effect that would have impacted other financial institutions.
There are no issues. The issues around African Bank are issues that are unique to African Bank. As you will be aware, African Bank is the only bank amongst our banks that has a furniture stall in Ellerins. So yes, African Bank has been faced with some challenges that related to its that are unique to its business model, and the central bank had to intervene.
However, there is another view, and it concerns moral hazard, and this is moral hazard at an institutional level.
So there's moral hazard that's being created for other banks. Essentially says, look, if you behave recklessly and you go broke, because we need to maintain financial sector integrity and stability, we are going to bail you out.
South Africa operates a fractional reserve bank system, and this inherently means that at any point in time, the banking system is inherently insolvent because banks generally tend to overextend and lend more than they have in deposits. This means that contagion is never far away.
Rumors spread quickly, and if people are uneducated and don't actually understand what's going on in the banking system, that really could collapse the entire banking system, even though it looks like it's quite stable and sound at this point.
All of South Africa's big banks have stepped into the consortium that has been put in place to try and bring ABLE back to life, that so-called good bank that everybody's talking about, because bankers understand a good deal when they see one. I'm Angela Coppola for CCTV in Johannesburg.
For more on this story, we're now joined by Angela Coppola, who's live for us in Johannesburg, and Miriam Bernard, who joins us live from London. Angela, if we can start with you. ABLE is closer to a payday lender than to a bank. How is the company's unique business model going to affect its future performance here?
Well, the bank's unique business model refers only to the fact that it has an ownership of those furniture businesses within the Ellerins group, businesses like Bears, Furniture City, Jean & Richards and Ellerins. And in hindsight, Kinnis was saying a little while ago that they'd paid too much for that. The business that was put into business rescue last week. That's the bad part of the business. So that essentially is in business rescue and being looked at separately. The ABEL board decided, I think it was probably on Friday, to stop funding that portion of the bank. And as I said, it's part of the so-called bad part of the bank, and it won't be a future of the ABEL business or the ABEL bank. G2?
Miriam, will the new capital for African Bank Investment help revive this lender, and how will it impact the bank's unsecured loans?
Well, for now, it gives the capital cushioning the bank needs. But many critics, or many people that I spoke with, are still critical of it, despite what Angela was saying. The bank never had that cushioning and shouldn't have relied on it. So now we'll see stricter requirements on loans and a clampdown after approving high risk, not backed by assets. You know, this caused problems in financing and extending loans to customers without taking in deposits. And analysts are telling me that unsecured lending peaked in 2012 at about 1/10 of total credit in South Africa. Even then, economists were warning that relying on high interest loans to over-indebted consumers could cause unraveling in the credit flow. Big banks like Standard Bank and Rand Merchant Bank started dialing back their unsecured portfolios then and there, but the African Bank Investment focused on its 3 million customers, which rely on wholesale funding, and didn't extend its exposure to other areas like retail.
Angela, if we can go to you, low-income borrowers in South Africa who make up the majority of these unpaid loans that are owed to ABEL are themselves struggling with high unemployment and the rising cost of both fuel and food, which, while it's understandable, has ultimately been the downfall of ABEL. Now, what will this bailout do to credit availability for other low-income borrowers in the country?
Well, it's interesting because the local bank registrar has been talking to ABEL for about 12 months now about its lending policies, and they've been tightened up. And interestingly enough, ABEL was fined around $2 million last year for its lending practices. But in terms of the other banks, it's really only Capitec that's still operating in the unsecured lending space, and that's in the lower end of the market. But I have to say that the debt councils are quite happy because things are going to be changing in the next 6 to 8 weeks with the National Credit Act, which has been amended and is coming into law, which kind of sets some limits. And it probably is going to mean that those debt counselors will probably have less work to do because banks will then have to stick to affordability templates when they think about giving secured or unsecured loans into that low end of the market. G2?
Now, if we do start to see banks start to pull back loans, will this move be mirrored by other banks? And how will this affect credit availability overall in the country?
Well, I chuckle because essentially what's happened is, ironically, because of what's happened at ABEL over the last kind of 12 months, that policy's tightened already. So it's interesting that there have been discussions, and we heard earlier, the fact is the regulator is probably going to refocus on Capitec because it's the only other big unsecured player or big player in the unsecured space. The danger, of course, here is that the unregulated loan sharks might begin to start re-emerging, and their interest rate charges are astronomical and are going to probably put the lower end of the market into even more debt. G2?
Miriam, if we can go to you, after warnings of full-year losses, we saw an investor exodus from the African Bank earlier this week. How will this injection help to reinstate South Africa's banking sector and its fragile economy?
Well, you know, G2, there's two variables that can further cause problems for the economy. One is that how many other banks will be affected by the African Bank's bad loans. That can cause a contagion effect, of course, as Angela was talking about earlier, from spreading with other lenders having to ask for financial bailouts and marking a major dent, of course, even in the central bank itself. The other challenge is the state of unsecured loans with banks across the region. The African Bank has avoided restructuring its debt, but many investors on this end now are seeing it as a bottomless pit, and that could trigger a lack of confidence in South Africa's banking sector. The Reserve Bank forecasts GDP will grow just about 1.7% this year after expanding almost 2% last year. This, coupled with 25% unemployment, major strikes across the board with platinum miners and metal workers, means that the bank is not in a position to alter its monetary policy, especially after raising rates, of course, twice already, despite a downwards revision of growth forecasts.
Angela, finally, if we can go to you, ABEL has been suspended from the trading floor of the JSE. When and if if we will see it come back, and if we do see it come back, when do you expect it?
Well, it's definitely going to be delisted, but it is a JSE process. There's also a fair amount of administration that has to happen at a company level, which means that there has to be a shareholders emergency meeting. Now, interestingly enough, the major shareholders have to vote on whether they're going to accept this plan or not. The bottom line is it's a shoo-in really, because most of the major shareholders are also the consortium underwriters in the new funding structure, so it's probably going to happen. I spoke with the head of strategy and communications at Saab earlier this morning, and he said to me, look, he can't give us a timeline right now, but it definitely is going to list that, the good bank, that is. The bad bank, we don't know what's going to happen there yet. G2?
All right, thank you for that analysis. Angela Coppola live for us in Johannesburg and Miriam Bernard live for us in London. Now we move to South African gold producer Gold Fields, which has received a letter from the government expressing concern about its social and labor plans. Now the company was quick to state that the license at its flagship South Deep mine was not in jeopardy. A South African newspaper said that the state had threatened to halt Gold Fields operations at South Deep, its only remaining South African asset. This would be done for a failure to provide accommodation to some 2,600 employees at the mine and other alleged transgressions. Now, mining companies in South Africa have to comply with a number of social and labor regulations. The laws were designed to uplift the mostly black labor force who were previously exploited under apartheid. South Deep is a mechanized operating system attempting to unlock the wealth of the world's largest gold reserve. Barry Callebaut, the world's largest chocolate maker, has canceled an annual meeting of managers that was due to take place in Côte d'Ivoire because of concerns over the spread of the Ebola virus. Now, its spokesperson told Reuters that the annual managers conference, to be attended by about 200 executives, would be moved to Davos in Switzerland. The meeting was due to take place in October and is the first time the Swiss-based firm has organized its global meeting in an African location. The worst Ebola epidemic in history has so far killed close to 1,000 people in Guinea, Liberia, Sierra Leone, and Nigeria. No suspected cases have yet been reported in neighboring Côte d'Ivoire, the region's economic powerhouse and the world's top cocoa grower. Looking now at the African markets that we track here for you, let's focus in on South Africa. The country's stocks ended largely flat on Friday, recovering earlier losses after better than expected U.S. economic data, with mobile phone operator MTN Group leading the risers. Now, the IMF will help Ghana address its current economic challenges following a formal request by the West African country to open talks for a support program. And when we come back, we look at the Egyptian president's back-to-back foreign trips and what they mean for the country's economy.
Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
We do know that the strike isn't anywhere near close to coming to an end either. That means that those workers are going to sink even further into poverty.
Welcome back. You're watching Global Business. Now, moving to Egypt, where the country's President Abdel Fattah al-Sisi has returned from a 2-day visit to Saudi Arabia and plans next to travel to Russia on Tuesday. Yasser Hakim reflects on why al-Sisi will talk business, not just politics, with the two leaders.
The first leg took Abdel Fattah al-Sisi to Saudi Arabia, his closest ally since the ouster of Mohammed Morsi from power in 2013. The monarchy contributed the major share of more than $15 billion in aid over the last year. Al-Sisi is seeking for more.
He requested more fuel at lower prices to cover for the extreme energy shortage plunging the country. He also discussed attracting more investors, especially for the new Suez Canal project.
Al-Sisi laid out to the Saudi king the government's latest austerity measures to fix the ailing economy and the new incentives for foreign investors. Sisi hopes this could convince Gulf countries to continue their plans to co-organize the Friends of Egypt Donors Conference slated for October. The tour will take Al-Sisi to another ally, Vladimir Putin. The Russian president had promised last year to support Al-Sisi if he was elected president. Egypt, the world's largest wheat importer, is expected to strike deals for Russian wheat. The Egyptian president aims to attract Russian investments in energy and tourism. Egypt has received the highest number of tourists from Russia for the past 2 years. President Al-Sisi will also try to take advantage of the recent embargo on Russia.
Egypt plans to export goods to replace countries that are boycotting trade with the Russians. We have food, chemicals, clothes and raw material to offer the country.
Egypt is undergoing an economic revival, and in his tour, Al-Sisi is turning to his friends for a shot in the arm. Yasser Hakim for CCTV, Cairo.
All right, joining us now live from Cairo is Yasser Hakim with a closer look into Al-Sisi's 2 trips. Yasser, Al-Sisi just returned from his first trip to Saudi Arabia, Egypt's largest financial backer. Can you tell us what came out of this meeting?
Well, first of all, he was speaking about the Donors Conference. The Egypt Friend Conference is a way to gather countries that want to support Egypt economically. And the ones who are co-sponsoring this are Saudi Arabia and the United Arab Emirates, to try to attract as much countries as they can to help gather and make an investment plan for Egypt. And that saw a positive move on that direction in the meetings, whereby the United Arab Emirates sent an envoy at the same time, a Minister of Economy, to meet with the Egyptian president and the Saudi monarch. The 3 of them, they sat together and they planned how it will go, probably in next October. Another issue was a committee will be organized to put a plan for the needs, to see Egypt's needs for fuel. Another big problem because of the energy shortages in Egypt. And this committee will also help make a timetable for shipments to go to Egypt to cover the energy shortages by sending fuel at reasonable payment facilities, as well as discussing the Suez Canal project, which Saudi Arabia has announced it will invest heavily in, but without giving any details at all.
Now, Egypt, currently the world's largest wheat importer, is expected to strike deals for Russian wheat. Have you heard any more on this leading up to Al-Sisi's Russia visit tomorrow?
Yes, Egypt had earlier said that it is planning to import around 100,000 tons of wheat from Russia within the next 3 months. What we heard now is that he will be signing a contract for double this amount, at least double the amount. We're told it could be 250,000 tons. Egypt usually imports more than 1.5 million tons from Russia per year, out of a total 15 million tons of wheat that Egypt imports annually. And we understand there will be a long-term agreement to even double the total amount from Russia, instead replacing Russia other than other countries, and increase the imports from Russia of wheat. Maybe it will exceed 3 million to 3.5 million per year.
All right, Egypt is said to have plans to capitalize on the recent embargo on Russia. What would plans for this look like?
Yeah, we got a statement from Andrei Karpov. He's the CEO of the Russian companies in retail trade. It's called the Russian conglomerate of retail trade companies. And he said that Egypt and Morocco will be replacing several European countries that used to export to Russia, especially vegetables, the fish and seafood, and also fruits. And we're talking around $5 billion annually that will be embargoed from the European Union and will be taken from Egypt, Morocco, and several other countries. Egypt is offering vegetables and fruits, as well as chemicals and seafood. This is only part of the offer that Egypt is taking with it, Sisi is taking with him to Russia to discuss if Egypt can export these products to Russia instead of Russia importing it from the European countries that have placed an embargo there. So we're looking at vegetables, fruits, chemicals, and as well as seafood and fish.
Well, that's not good news for the EU, but $5 billion of good news for Africa. Let's look now at commodity prices to see how they are closing the day. Specifically, let's focus now on Brent crude, which is hovering right under $105 a barrel, dropping from a one-week high on Friday as the U.S. intervention in Iraq erases concerns over the risk of disruption to supply from OPEC's second-largest producer. We feature the money tree that farmers want nothing to do with.
BizAsia. Asia means business.
Welcome back. You're watching Global Business. Now let's move back here to Kenya, where livestock farmers in the country's Rift Valley are a happy bunch following an initiative that has turned the invasive and unwanted Proposis juliflora tree into a treasure. Now in places like Sudan and Chad, the plant is called the devil tree, while in Kenya it's just called the mathenge because of its devastation that it inflicts on goats. Now, the plant was introduced to parts of Africa because of its drought resistant, but it's turned out to be a bigger inconvenience than not. On tonight's Grassroots segment, Carol Oyola tells us how innovation has turned this nuisance into a money maker.
This woman has had enough. She's brought her prized possession to a Kenyan court not only as evidence, but as a complainant in her case against the government. A plant locally known as madenge is the cause of her woes and the community at large. It has maimed their goats and killed many too. It is a plant that contains a sweet fruit that is poison for their livestock, and they can't get rid of it. Like a weed, it's growing out of control.
The madenge tree that was once a nuisance to this community has now turned around and become a source of livelihood. Now, for every tree that is cut down, a farmer can fetch up to $150.
Farmers in Baringo County in northern Kenya are now benefiting from this plant. A new project is underway that will generate power from the madenge tree. Cummins has started construction of a power generation plant in the county that will produce biogas solely from the tree.
It is a good source of biomass, so a lot of research and development has gone into it for it to be found to be viable, and that's why they've started this project.
This is the first project in Africa and is expected to harness 1.75 megawatts of natural gas. According to plans, it may well be the most efficient way of electricity generation via biomass, and the farmers are happy.
We've gotten money. It has helped farmers sort out their financial issues. We've come to like this tree.
Us using madenge is actually a boon to the farmer and also to the government in a sense, because now they've found a use for madenge. Yes, so that would generate income and a new kind of livelihood. Okay, so now they would not be fighting the madenge, they'll be using it for profit.
The project was partly funded by the Africa Enterprise Challenge Fund. It awarded Cummins a grant of $1 million following stiff competition with other applicants.
It's pushing the envelope on biomass for electricity production. At the same time as it's bringing multiple benefits to the community. It's a rural area, it's a very dry area, and people in the surrounding area can bring biomass and get paid for that.
The project that began in January is expected to be complete by October this year. Carol Oyola, CCTV, Baringo, Kenya.
Let's take a quick look now at your money and see how it's trading the day. Specifically, let's look now at Kenya, where the Kenyan shilling was a touch weaker on Friday as weighed down dollar demand from banks replenished their positions, noting signs that a domestic funding crunch was easing. Tomorrow, we go back to bank earnings in Kenya with a focus on Barclays that should be releasing its half-year results. Now, banks here have so far reported good returns, but we'll also be looking at a new requirement that banks disclose all their costs when calculating loans, interest, and other charges. And Madagascar's citizens take up online shopping as the island's economy slowly recovers, remembering that the IMF has announced that it was resuming its relationship with the country earlier in the year. That's it for this edition of Global Business. Remember, you can send us your feedback to globalbusinessafrica@cctv.com. You can visit our Facebook page, CCTV Africa. You can also stay in touch with Global Business on Twitter using the handle @CCTV News Africa. I'm G2 Abraham. Thanks for watching.